All right, happy new year. This is the weekly outlook in the DeFi Dojo. It is January 6th, 5 days before my birthday and 6 days into the new year. December was quite boring as I expected it to be, so I took some time off to spend with the family and do holiday traditional things. And I had a really good time just not. I don't even think I turned my computer on for 2 weeks, which was just amazing. And to do that is definitely needed. I'm recharged, and I feel like we're going to have at least a good first quarter to this new year. After that, things get a little bit dicey. So for me, I have everything pointing to March of this year, which gives us about 3 months to really make a statement in crypto, particularly equities. I'm not so sure. We're going to go over this chart, and I'm going to welcome some people in the chat to come in and kind of maybe debate or just kind of give some points as to where we might see this cycle top. I've seen a lot of things on CT, especially where people are saying, end of this year is probably when we'll see the cycle peak, and we got upward targets anywhere from, 200K to 300K Bitcoin. And I'm not opposed to it. I don't think that it's impossible. However, everything that I see points to a cycle top around March. And that would, could either look like a pointed top like this, or we could see something more like last cycle where we had a big distribution happening. And really, I kind of point to this one here as the real cycle top. That's when the MACD and the RSI topped. You can see the second peak here. Was definitely lower, and momentum was a lot lower, and that's actually when I exited everything, because you could see that divergence very clearly. So based off several factors that we'll go over in a little bit, but I'm going to get through all the major charts first before we do. We're going to talk about where we think we're going to top and how high can Bitcoin go, and then that'll also let us know, like, when should we expect altcoins to top. Are they going to follow Bitcoin's peak and then, continue to go parabolically higher as Bitcoin's venturing sideways like it usually does during its peak of the cycle? So if you'd like to get more videos like this, hit that like and subscribe button. Discord link is in the description if you want to come join us in the server. We got a really great community over here, and we're currently doing really well. We bought the bottom in October of 2022 on equities. At least I did, and I announced all these things in the server. And now I'm in kind of selling mode in equities. I've been taking profits probably since August of last year, and I'm going to continue doing that this year. I'm not really adding anything new in equities markets. I think that this is going to turn into a seller's market in the next year and a half. And I'll show you several reasons why I think that as well in this video. But first, we're going to talk about the dollar. The dollar has gotten above this major fib cluster. And you can't really read this because there's two fibs here lined up in the same exact spot. And I'll zoom out just to show you which two fibs those are. We have the all-time fib drawn here, which is basically the dollar strength's all-time high to its all-time low. And that gives us this nice 50% mark here, which is this red line. Then I took the low in 2018 to our last major high back when the bear market bottomed, which was October of 2022, which is where we in the Discord bought Nvidia, Microsoft, Meta, Netflix, Google, Amazon, the Tesla, so many things that we bought down in those lows, and we're well up over 100% on a lot of them, and I've been taking a lot of profits on those things. But now that we are getting back up over this major fib level, and you can see that it was part of these distributions back here in accumulations, so to speak, where things kind of started going sideways. So I do think that we could stay here for a little while. I don't know if we're just going to continue to go straight up like we have been. But the fact that the dollar is fully bullish again is a little concerning for equities markets, mainly. It can have an effect on crypto as well. But when the dollar starts shooting higher, it means generally that markets might turn bearish soon. And this is what happened, during this bear market from 2021 to 2022. That's this dollar rise is what's contributed a lot to that bear market. So we could be in for another one of those, and it's just now getting started. And so for that reason is one of the main reasons why I'm taking profits on equities. Another main reason I'm taking profits on equities is because we've reached the main 1.618s on every major index now. So if you take that bear market from 2022 to the beginning of 2023, this fall is what I've measured. And this was the take profit zone in between the 1.272 and the 1.618. We've surpassed it, but now it's starting to look like we might come back down to retest it here shortly. Things are not making higher highs anymore over the last several weeks. And if we look at the Dow Jones, it's actually fallen back underneath its 1.618. And I did the same thing here. You just measure from that high to the bear market low, and you get these fibs. And this is the take profit zone. It can overshoot, which it did, and now it's falling back under. So this could be our map for the NASDAQ and the S&P 500. And maybe this is what we can expect to see. It's just the Dow Jones is doing it first. It was the first one to hit the 1.618 as well. So the Dow Jones may be ahead of the other two indexes. If we look at the NASDAQ, it pinpointed that 1.618 several weeks ago and has since made lower highs. So I don't know if this is fully rejecting it now, or maybe we want to go retest it. If we look at QQQ, it has yet to reach its 1.618. And if you don't know, the QQQ is the ETF that trades the NASDAQ. And you can just draw the same thing on this as well. And so there might be a little more upside left to see, and maybe that's what we get for the rest of quarter one. But after that, everything's still pointing to downside after March for me personally. And that's when we'll get into crypto and show you that as well. If you use your weekly chart, you can use these pivot points, and we now have new weekly pivots because these weekly pivots are derived using last year's open and close, and then they apply a Fibonacci sequence to them, and then you get these values. So right now we're over the weekly pivot, which is way down here, but we're below R1. And so this is our current resistance, is the 1.618 followed by that R1 there. And you can do the same thing with the S&P, right? So you can see this resistance up here at 6150-ish, and our support is going to be that 1.618. If we do fall back down below here, right, and you start seeing that 1.618 as resistance, this 58.48 level, that's not a good sign, and that means things could potentially continue to go lower, and we may have peaked. You have severe divergence here as well. So on a weekly chart, and this could go on for a while, but you can clearly see this is trending down, and this is trending down, while this whole market has been trending up. And this is just a recipe for a fall. This is just what happens. It doesn't mean we can't continue to do that for another 3 to 6 months before it falls. Totally could be possible. Things can stay bearishly divergent for much longer than they stay bullishly divergent, which is how we were able to nab the NASDAQ at these lows in October of 2022. And I can show you that as well, because this is a good little teaching tool here. You see this market trending down, but then if you look at your RSI, this is clearly trending up. So when your market makes a lower low and your RSI makes a higher low, that is bullishly divergent. And this is where we bought everything. And you can see this is October of 2022. When I saw that and I started seeing these big green candles coming back over the EMAs here, this was my cue to start buying as much as I possibly could. And I did. And so we have beaten hedge funds at this point. And there's no shame in taking profits up here. Because we were able to nail that bottom so well, we can afford to not nail the top, right? I am pretty confident that in the next year or two, we will have lower prices than where we are right now. Why do I think that? For several reasons. One is the 18-year housing market cycle. I'm not sure if this is going to pull it up. It's not. Oh, yes, it is. Great. Let me get rid of that fib. Maybe it's not. Is this it? Is this the chart? I didn't have it prepared. It's not the chart. I don't know what that is. Anyways, I've posted it in the Discord before, and I mapped out the last 18-year, probably 6 18-year housing market cycles from the Great Depression forward. And you can see on there that every 18 years we get a bear market for at least a year. Some are very dramatic, like the 2008 one, and some are very minimal. So do we get a minimal one or do we get a dramatic one? I don't think it'll be as bad as 2008. That had several other factors involved with it. But I do think it'll be quite substantial. I think valuations are very high. I think price to earnings are very high compared to prices. And I think we need a big correction. So I'm selling things and stacking cash and waiting for that opportunity to come. And when that opportunity comes, I'm going to see it. Just like I saw the bottom in 2022, I'll see the bottom that comes next, and we'll be able to capitalize on that as well. Moving forward to crypto. Here is USDT, and this is the stablecoin dominance chart. We have broken the all-time trend line, and we came back to retest it at the end of the year, and now we have rejected that trend line and are now pointing back down. We have our nice new weekly pivots here, and so we can probably expect to see this S1 pivot on USDT dominance. What does that mean? Well, as this falls lower, crypto goes higher. When this starts going higher, crypto goes lower. So I think we could see this pivot down here at 3.76%, which would push crypto higher from here. After that, we'll see. Maybe we get another bounce. But if we break below that, that's also another great sign. So we'll see what happens when that time comes. Looking at total market cap, my little squiggle that I drew here several weeks ago is played out nicely. We got this little pullback back to the all-time high, which is at 3 trillion. And now we're starting to bounce, and we've been hanging out on top of this weekly 8 EMA, which is a great indication that we are bullish and we might continue higher. Starting to look like a little bit of like a pennant formation happening. Maybe this wants to venture sideways a little longer before making another move up, but I do have confidence that this will continue higher and at least reach 1.272 at 4.43 trillion. That would be a big boost for all of crypto. If we compare altcoins to Bitcoin, this is one of my favorite charts. So this is total 3. We've taken out USDT because that doesn't really apply. We don't want to know about that. We just want to single out altcoins in particular and divide it by Bitcoin itself. And this tells us how altcoins are doing against Bitcoin. And since October, which is when I thought we might have bottomed, and then we get this bullish engulfing candle, this is when I started buying altcoins. We've had some bullish movements, right? And now we've got a pullback. Our weekly EMAs are now bullish, and we have this nice new pivot at this 236 in the same location as the 8 EMA right now as well. So I'll zoom in so you can see that. But this is what we call confluence. We have all of these 3 indicators pointing at this exact spot. This should provide very, very good support. So if this chart were to come down here to touch this, I'm buying more altcoins. And then I'm going to take it for this ride. I think we can see this move up substantially well as long as this mark holds. If this mark fails, then that's another question, and we start getting into a whole new set of scenarios. But for now, I'm bullish, and I think that altcoins can continue to rise against Bitcoin. Looking at Bitcoin against the NASDAQ, this is the chart that tells me, do I want to be more favored in equities or do I want to be more favored in crypto? And this chart still tells me I want to be more favored in crypto. I think that this chart could see the 1.272 as well. So most of my money right now is focused on crypto, whereas in equities, I'm taking profits and converting to cash. If we look at, let's start with Ethereum. Ethereum has been trading inside of the greed FOMO zone. And if you're not familiar with the greed FOMO zone, that is the area between the 786 and the 886. When prices get into this zone, things can move very quickly. As you can see, we move very quickly up, very quickly down, and we're starting to move very quickly back up again. As long as we hold 3376, I'm a big holder of Ethereum. I actually do not own any more Bitcoin. If we look at the Ethereum Bitcoin chart, this is where I converted all of my Bitcoin to Ethereum. It actually was way back here in November. So I thought I did really well in the first month, and then 2 months later I was like, maybe I made a bad decision, but we're still bouncing up again. Kind of looks like a double bottom formation here, and I'd really like to see it get back up above this yellow line, which is the all-time trend line. So still waiting to see what happens here. Things are still pretty bearish down under here, but we are crossed and venturing higher now. So it's starting to look like a reversal is possible in the next week, 2 weeks, 3 weeks, who knows, could be 3 months. After Bitcoin tops, Ethereum and alts can still continue to do really well as people start playing the game of shuffle and moving Bitcoin profits into altcoins and start to get that euphoric rise out of those at that point in time. If we look at Bitcoin itself, it's still doing what I expected to see it doing. which is holding that 8 EMA on the weekly. So basically all of December was spent on top of the 8 EMA. And that's perfectly fine, perfectly normal to have a pullback, especially after hitting the first take profit target at the 1.272. 1036 is a big spot. As soon as we can get another weekly candle to close over that level, then I can say, all right, we're probably going to push up to the next, right? Use these weekly pivots. These are inside of the take profit zone. So we have our main TP targets, which is the one we've already hit, 1036, 128.1, and 173.8. Inside of that, we have all these pivots where we likely have some pit stops along the way. I fully recommend, and if I still had Bitcoin, I would be taking full profits probably here, and then waiting for a weekly candle close over to confirm whether or not I want to get back in and try to make the push for 173. All right. And now's where we're going to get into where do we think we're going to top and when. For me, the maximum I see Bitcoin going is 173.8. Doesn't mean it can't wick over a little bit, but I don't think we're going to see any higher than that. Why? I'm going to start going into that now, and then after I get done with why I think we're going to top somewhere around March at the maximum of 173.8, then I'm going to leave it out to you guys to, you can come in and talk and share your charts if you want as well, and let me know why you think that's, it's going to be different, and show me what you see. So I'm going to use this blank Bitcoin chart. And what I'm going to do is I'm going to show you the pattern that I've found, okay? So I'm going to be measuring the bear markets as well as the bull markets. And we're going to see where things topped, and we're going to see how far things retraced. And there's a pattern that happens here. So if we just start with the first bear market here, right? So I'm just going to measure from this top to this bottom. And you'll see we topped at the 2.272, right? And again, it wicked over, but it didn't close over, and you had two tweezer top candles here marking the top, right? And then we come back down and we find support on the 1.618, and then the next bull market begins. So the next one I'm going to draw is this bear market. So now you're going to see, if I go from this top to this bottom, the same thing happens. We top at the 2.272, right? So it's the same pattern, just repeated. It got over, but then it quickly came back down and the bear market started. So the next one I'm going to measure is this top to this bottom for that bear market. Now what do we see? We did not get to the 2.272. This time we got to the 1.618. So there is a regression happening there, right? So now if I measure from this top to this bottom, and if we are to regress continually, like that might be the start of the regression, in my opinion, it would be very odd to go 2.272 top, 2.272 top, 1.618 top, and then go beyond the 1.618. You can clearly see that Bitcoin is regressing. It's not having the same parabolic returns every cycle. It's actually having diminished returns every cycle. So to go from a pattern of regression to flip that and go opposite, to me, doesn't make much sense, right? So now if we take the current high to the last bear, that is where I'm getting my fibs now. And that's why I think 173 would be our top at the max, right? Like maybe we do 2.272, 2.272, then 1.618, 1.618, and then maybe the cycle after that tops at like the 1.414 or 1.272, right? Or maybe that's the start of the regression, right? And now we top at the 1.414. Maybe 128 is it. That is the main reason why I'm planning on, if I was in Bitcoin, I'd be taking full profits at 128. I'm currently swapped everything to Ethereum at this fib. That's what I did personally. I don't know what you guys have been doing or what your plans are. Hopefully I can help with that. I don't see any real concern, divergently speaking, other than this last top right now. So you can see this went higher. This is a higher high. That's a higher high. And now we have another higher high, but that RSI peaked and is lower. So we already have some signs of bearish divergence here on the RSI, not on the MACD, right? This is actually going higher, so it's not complete confluence. So perhaps that's meaningless, right? I don't know. All I'm showing you here is there's slight weakening happening with a higher high in Bitcoin already, which is another factor that I consider when thinking, can we get past the 1.618? The next thing I'm going to show you is the lows. So now we're going to erase and zoom all the way back out, and I'm going to show you the pattern of the lows, and this was something that helped me nail the bottom here at 16K. So if we take the low to the highs now, right? So we're going to go low to high. You can see, actually I started with the wrong cycle. We're going to go, I guess I should do this one, the very, very low to the high. You can see the 236 is where we found support, right? That's the sign of a strong trend. If you've taken my one-on-one sessions, you know what I mean when I say that. That is the sign of a strong trend there. So that went higher. So now if we take the next one from the low to the high, you can see we kind of went below the 236 this time, but never really tapped the 382, right? So it went a little bit lower, but not low enough to tap the 382, but it still went lower than the previous cycle. Now if we take the next set from this low to this high, you can see we nailed the 382 perfectly. That was the bottom, right? Very, very nicely and precisely. So we've got a little bit of a pattern starting here, right? We went 236, slightly below the 236. Now we're hitting the 382. And if we go to the next cycle, from this bottom to this high, you can see we hit the 0.5 very perfectly, right? So there's a pattern. We went 236, just under the 236, then we hit the 382, and now we hit the 0.5. So what can we expect in the next bear market? Well, I fully expect to see the 618. That's the pattern that's happening. So wherever we do top at, we're going to be able to find the bottom. So let's just say the top is at that 173 mark. And we go 173-ish. Come on, like right there, right? You can see why we're having trouble around here, right? That's the 236. You can see all of these resistances here at the 382. You can see the 0.5 support, right? You can actually see the 618 support here as well. If we zoom into that wick, it's pretty perfect. And so just putting that fib where I think we could maximally top out at, the fibs line up with the previous price action already. And so that is another indication of why I think we might top at the maximum at 173. Now, if that is the case, then we can expect our bear market bottom to be somewhere around 38 to 40K, right? And that makes sense because you have all of this consolidation in here, right? That is where the major support would be. So all of this is pointing to a 173 as the maximum top that we see. Now, if we go into this chart, this has several things in it showing why I think that this March area is going to be the top. And I've been saying this since I bought the low in 2022. Now, 100K to 170K has been my target for 2 years since I bought at 16K. And I don't have anything yet showing me anything different, which is why I wanted to have this live stream. I wanted to have it because I wanted to get other people's perspectives. And if I'm wrong, I want to know that I'm wrong, right? And if I'm wrong, I want to be shown that I'm wrong, and I want it to be able to help other people, because that's the main purpose of all of this. The main purpose of all of this is not for me to be right about anything. It's mainly to just help other people do better managing their own money, and not listen to everybody on Twitter, because that's the main reason I started doing this to begin with. Now, first thing you probably notice are all these moon pictures, right? And just to briefly go over what those are, the green moons are the first lunar eclipse of a season. If you're not familiar with how total lunar eclipses work, they have seasons or stretches where there's consecutive total eclipses in a very short period of time, and then for a really long time there's nothing, right? So in between the orange and the green, there are no total lunar eclipses, and that's typically when you see the bulk of the bull market. In between those orange and green ones is when most of the money is made. After the green one is when you want to not be buying anymore and you should be selling or completely sold out by then. I don't know if this pattern continues. I don't really use this as my main judgment for this. I just think it's fascinating. So right now, our first total lunar eclipse of the season happens in March. This also lines up with all of the other things that I've seen pointing towards March. For example, the number of days it takes to go from the halving to the cycle peak. So if you measure all of these from the point of the halving to the cycle peak, you get 364 days here, and I have these in these blue boxes. 364 days from the halving to the cycle peak. This was the longer one that happened 526 days after the halving. But besides that, the consensus is around 360 days. At least for most of the cycles that we have to work with now, which really isn't many. It's like 4, right? And then I have this pattern of 14, 1200, 1400, and then possibly 1200, 1400, depending on which peak here you think is actually the bull market top. In my opinion, the first peak was the real bull market top because we had a higher RSI here. The momentum was strong during this time. It was part of the biggest rise, and this was really just a relief bounce that kind of got us a little bit higher, but with far less strength according to the RSI and the MACD. But if you measure from, I think it's the bear market low, to the peak, you get 847 days here, which is this green number, right? So if I measure from this bear market low to the peak, you get 742 days, right? So they're pretty close. So if you measure from this bear market low to the peak, which I think is this peak here, you get approximately 847 days. It's exact, but I'm on a weekly time frame here, so it's hard to nail the day to get that exact number. But it is 847 days. I did it on the daily chart. If I go from our last bear market bottom to where I think the peak will be, which is in March, you get 847 days. So this is another thing telling me that I think we'll peak in March, right? Now, as far as these other numbers, 1400, 1200, 1400, I actually forgot how I got those. Which is kind of embarrassing because I probably should have looked at that. I know I had this at one point in time. I just can't quite remember. I think it might be bear market to bear market. Let's see. Oh, that is what it is. Okay, so from bear market to bear market here was 1400 days. Then from this bear market to this bear market was 1200 days. That's how I did it. Okay, so we got 1400, 1200, and then from this bear market to this bear market was 1400 days, right? So then we can either expect 1400 or 1200 for our next bear market. Okay, and if I do that, look where it puts me. 1200 right to my last lunar eclipse, which is the ones that mark the bear market bottoms. So those are all of the things that show me that this chart and the other things that I showed you point to a March top and a February of 26 bottom, right? Now, we very well could go up and hit that top in March and then go sideways for months and do another one of these type of distributions where the top took extremely long from like here to here was over a year of topping, whereas the previous cycles topped for like 3 months, and then you could clearly see the downward trajectory had started. I don't know what we're going to get, but I do know that this timeline and number of days and freaking moons and all this stuff points to March. And we'll see if equities line up with that as well. I'm obviously going to be keeping track of the NASDAQ and seeing if I see bearish divergence happening around that time. And if that happens, then that'll give me more confidence that it's time to just sell and wait and get out. Wait a couple months, and then we start shorting. If you were here in the last bear market, we did really well shorting. I didn't quite have all my channels set up yet, but I was shorting Luna from like $86. We didn't get it all the way down to the pennies, but it was a really nice short. And we made money in the bear market. Mostly because we knew it was time to get out and we knew that it was time to short, and that's how you make money all the time. So, with that, I'm going to leave it open to the floor. Avi, if you want to start, you can. If not, I understand as well. There's a lot of people here, so in the chat, if you'd like to uh, say something about why you think it might be different, please let me know. I would love to hear it. You're free to speak as well. So go ahead and unmute yourselves and speak, or type it in the chat, whatever you prefer to do.
Yo.
Yo.
So I mean, fundamentally, I think totally makes sense why you feel like we're gonna top in March, especially when you look at kind of the intervals between the days and things like that. I guess one thing I was really curious about like 2 months ago was why we kind of had this like weird bimodal top in the 2021 market. Like every other market, every other cycle that we kind of looked at, we had this like kind of crazy like blow off top. And obviously they were earlier, so you could say like the adoption cycle and liquidity changes could be like some of the reasons why. But the more I like kind of went back to 2021 and just looked at like news and kind of like what happened. Um, I don't know if you guys remember there was that like China ban on Bitcoin, which
Mm-hmm.
was like them
Yeah.
basically saying they're going to ban Bitcoin mining,
Right.
and then everybody was supposed to like sell their coins
Mm-hmm.
to basically like relocate all of these like machines and mining hardware and all that kind of stuff. And it caused problems with like Bitcoin, it also caused problems with Nvidia and like a few other hardware companies. And that was kind of like near-ish to that first like top. I think it was in like mid-ish 2021. And then we kind of had the the other thing that we had that we didn't have in the prior cycles was leverage. I think leverage trading or perps trading was introduced in 2018, and I think it was on BitMEX. They were like the first exchange to basically offer perps. And so we started to have all these people that were taking kind of leverage long positions, and then now you have people who are incentivized to take kind of the other side of that trade and become like willing sellers by taking short positions because they had these higher interest rates. So I mean, obviously now we still have leverage. And so I think the leverage is what's maybe dampening kind of these cycles to a certain
Yeah.
degree.
Absolutely could be.
And then on top of that, we have like institutional options and hedging there. So there's like, I mean, we had like an insane amount of ETF flows the other day. And everyone was like, oh, like, this was probably just people buying after they sold for last year's tax loss or harvesting purposes. But if you look at, there's this website that I'll have to find. I think it's velo .xyz that has kind of the stats on the basis trade, which is basically like the ARB opportunity for the difference between the options and being long the ETF. And that massive inflow basically correlated with a huge drop in that basis trade. So you could kind of assume that like a lot of these ETF inflows, which I think Zach has said like several times in Discord, are actually just like basis trade inflows. So it's like not necessarily moving price as much. Um, but it is kind of like, you know, bringing money in. The net effect is going to be like supposedly net neutral. So now I'm like trying to think like how's all this stuff gonna affect this cycle? Because obviously all those things are still here, so you would assume that you would kind of have this like muted effect again, especially now that it's gotten so big. But one thing that I guess I forgot to mention before was the Fed pivoted to quantitative tightening like right at the end of 2021, basically.
Mm-hmm.
So you kind of have liquidity getting sucked out of the market in that sense. People are like more risk off. And so I think, that kind of had a big effect. And right now we're in this weird like situation where the dollar is strengthening. And we're not exactly sure. Like we're not changing rates right now. I think inflation's back to around like 3% if you check Trueflation. And we're kind of like everyone's like, well, what's going to happen? Like, is Trump going to take office? and then he's just going to blame Biden for whatever happens, and
Yeah.
then not go back to like QE or like printing money. Like I have a hard time. Like I think there could be a point in time where the dollar continues to strengthen. I think the pivot is at like 114. Like we could probably see it go to 114. But I think if we get to a point where Trump, who's like a very pro um, stock market and now pro crypto president, I have a hard time believing he's gonna like allow that for very long. I don't know what's going on with all the tariff stuff. Apparently, there was some news today that came out that the tariffs aren't going to be as broad, and then the dollar like wicked down immediately as a result, and then it came kind of like right back up.
Mm-hmm.
So there's a lot of unknowns there. But I'm saying all of this stuff, and I know it's a lot of different things, and it might be a little hard to follow. So I apologize for people listening. But I think one of the things about this cycle that is like fundamentally different than the other cycles is we've got a president who's literally calling for a Bitcoin reserve, which I don't know if that's actually going to happen. I think Powell came out and said the Fed literally can't hold Bitcoin, so there's probably some fundamental changes that need to happen before that can become a thing. Um, but if that does come to fruition, I do think that's what's going to kind of drive adoption, not only in all of these like different investment funds that are now seeking exposure to Bitcoin and potentially all of these other nation states and countries that might be adding Bitcoin to the balance sheet. But if the US is doing it, I think it's inevitable that everyone else is going to start to do it. And we may actually see an extension of the cycle. We've seen a couple of these rules be broken in the past, like the rules you mentioned. I'd say the cycle low rule, like you pointed out the fib stuff, which I hadn't seen before, and that's interesting. But I think what I'd heard previously as a rule was that the cycle low for the next cycle is never going to be lower than the prior cycle top, is like what I've kind of always heard. And obviously, this past cycle low was lower than the past cycle high, and again, the reason for that is pretty clear. It was Luna in May and then FTX in November. So you had, these pretty catastrophic black swan events back to back that occurred that drove price pretty damn low. Another thing that I thought was like really interesting, which might explain why we didn't go as high as we could have gone before, was that FTX's bankruptcy collapse. When you looked at the reports that came out after the fact, and these were the reports that were shared in the proceedings in court. They owed customers over $1.4 billion in Bitcoin, and that comes out at that time's pricing. I think it came out to somewhere around like 80,000 coins that they didn't have. So these people were basically like buying Bitcoin thinking they had it, but it was like paper Bitcoin, right? And 80,000 Bitcoin is about a quarter of all the Bitcoin that was mined that year. And it's basically meaning that their issuance of that 25% basically diluted the market. So that supply that should have been sucked up by like actual buyers that wasn't getting sucked up could have just been the reason why we didn't get pushed to 100K when everybody was calling for it. Like I don't know for a fact if that's the exact effect it would have had, but that was another thing I read about recently that I was like, that's pretty significant. Like, if you had 80,000 coins of demand that never actually got bought, then that's definitely gonna mute your price action a little bit. So yeah, I mean, I don't have answers in terms of targets. I've already told you I think we're probably gonna go past 250 or at least a weekly close above it. I don't know how long we'll last up there. But I think a lot of it just has to do with what Trump's able to do during his presidency, and then also kind of what the monetary policy is going to be. Um, and I think just because of the fact that if the U.S. somehow does do the strategic reserve thing, I mean that's going to be nuts. Like I don't think we'll see us like this cycle will be different. I think than most that we've seen before, simply because of that.
Okay, awesome. Thank you for sharing. Yeah, as far as the last cycle top, a lot of people thought we were going to 100K then, and I think that was like the main target. I think that was like everybody in everybody's minds, like, oh, we're going to 100K, and they used that to fuel their selling, right? They were like trying to push that. I remember there was like commercials and stuff, and I think it was part of the exit strategy for most bigger Bitcoin holders. That top here still lined up with that eclipse, which fascinated me. Even though we did go a little bit higher on the second one, but one thing that I want to kind of ask is like, so from this low to the cycle top was 1,800%, right? From this low to the cycle top was almost 10,000%, and then from this one was even more. And so you can see that the percentage gets significantly lower each cycle, which makes sense as well to see those diminished returns. But if this one is, let's call it 1,900%, and we go from this bottom here to 250, that's like 1,600%. And so the percentage that we dwindle, so to speak, seems like it should be a lot less than that. Don't you think? Like, don't you think it should be, like, if we went from 10,000% to 1,600% in one cycle, then shouldn't it be a lot less from 1,600% to, like, let's just say 800%? You know, like, at least half?
How do you know it was supposed to be 1,900%?
No, I don't mean like, I'm saying if I take the bottom to 250.
I know what you mean, but I'm saying for the past cycle, what if it should have gone higher and it didn't?
Maybe you're right. Maybe it should have gone higher. Maybe it should have gone to the 2.272 like I was showing here instead of the 1.618. Absolutely,
Right.
could have. Yeah, maybe because of, you know, like everyone's saying, like COVID and all that. Maybe this one cycle is stifled, and now we resume to our regularly scheduled programming of going to the 2.272. And if that's the case, then we would go way higher than 250. We would be going to, let's see, where's 462 is the 2.272. So yeah, I mean that's definitely a theory. You know, like maybe, you know, we've had all these blow off tops every cycle. This one didn't. It didn't go as high as previous cycles. Because of that, it went lower. Right? Like if we would have gone higher, then we wouldn't have maybe touched the previous cycle's high. And maybe that's just the anomaly. Maybe that cycle's an anomaly. Totally could.
Yeah.
Totally could
I
be.
mean, I think there were just so many things going on last cycle, and like I will say that I have fully jumped on the boat of TA is real. Like, I'm not trying to say fundamentals drive TA, because I think technical analysis is, like, especially over the last year and a half, just everything I've seen, it just makes a lot of sense. I think people's brains, whether or not they realize it, work in patterns, and TA is what helps you kind of see those patterns.
Yeah.
But I do still think that there's obviously, like, fundamentals of the world that we live in that can potentially influence not the pattern itself, but maybe where the ending point is, if that makes sense. So like if the ending point of a cycle is at 100K, there's patterns within that. If the ending point of the cycle is at 200K, there's patterns within that. So like the TA is still useful to find the patterns within the bottom and the top, but where the bottom and the top is, I feel like depends a lot on kind of like what's going on in the world. And that's why I think I sent you a graph of this, and I'll try and find it in the meantime. But that kind of like exponential like rainbow chart that everybody looks at.
Yeah.
I actually think I have it. One second. You want to chat about something else while I pull it up?
Yeah, so Steven has shared something. It says COVID was priced in.
Oh, that was a joke. Don't read. That's a old meme.
Oh, see, I'm not up to date on the memes. All right.
But I do. I mean, you know, this tangential to the point being made here. But typically, the thesis or the meme is that alt season has higher highs after Bitcoin does, and I'd love to hear your perspective on when you think the alt season all-time high will be, and if ETH is considered an alt, or if ETH is going to be sort of directly in tandem with BTC.
Yeah. I think ETH is still an alt. I think if it's not Bitcoin, it's an altcoin. And if we look at how Ethereum bottoms and then makes that move, it's gradual at first, like we're seeing, sort of right now. And I know there's a lot of freaking lines on this chart, so it's hard to see. Let's get rid of that and that. But it bottoms and then double bottoms, and then starts to grind higher. And after it makes that first bullish cross on the weekly, that's when we know that things are going to go higher. The problem with the timeline with Bitcoin right now is that it doesn't look like we have much time left in order to get to March, right? It's only like 3 months from now. And then when Ethereum Bitcoin bottoms, there's like a lot of time from where it bottoms to, its potential top. We got a year here, right? So this was one of the main reasons why I thought we would have seen this moving up higher a lot sooner, and why I was a big proponent of Ethereum here, and now here. And so it is starting to get a little bit concerning. Like, how long is it going to take to get back up to these levels up here where we basically started, and then potentially go higher? I don't know. It's definitely concerning. And so I absolutely think that if Ethereum's going to do well, it has to do it continuously after. You should have maybe read the whole thing out loud. You should have. That would have been funny. It has to happen way longer than after Bitcoin tops. And so if that's the case, then that's phase 2, and then we see phase 3 and 4, which is when the lower market cap stuff starts popping off. So I absolutely think that this entire year could be filled with crypto gains, just not necessarily from Bitcoin and just Ethereum. So Solana, I don't know what to think about Solana. Its dominance is now looking like it's bearish. So if you go to the Sol dominance chart, it was kind of trading up in this little wedge here. Now it broke down below, came back up and retested, and now we're retesting the weekly EMAs bearishly. So I don't know if even Solana can do what people think it can do and become the next Ethereum, unless it can reclaim this up here on the dominance chart.
Solana's got like 10 billion in unlocks coming up.
Oh crap! Really? Yeah. So I'm probably going to sell all of my Solana here shortly. I thought I might get more out of it. I got in down here at this dotted line at 147. So modest returns, relatively speaking, to crypto. I wasn't a proponent of it down here where, most people are probably, doing really well. But it is breaking this little bit of a bull flag. So I'm hanging on until I see some weakening happening. So far, it still looks pretty strong. And on top of this 886 here, I'm still going to hold. If we fall below 174, I'll dump it. But until then, these are the potential, high points on it. And so if Solana is going to be the next Ethereum, I don't want to miss that, right? And if Ethereum is going to do what it normally does, I don't want to miss that either. And so they're both sitting around this greed FOMO area that can potentially produce significant gains. And so for Ethereum, I think this is where we can see the top. And how fast, I don't know. It's starting to look up again now. And, if we get to 14K on Ethereum, and let's say Bitcoin tops at 128, then that definitely makes sure that I win all 3 bets against Abby.
I'm hoping to win at least one, It'd be pretty bad if I lose all 3.
Yeah. I just don't want to lose all 3 either. So hopefully we can break even. So, all right. Does anybody else have anything?
Honestly,
oh, go ahead.
That's why I opened the other 2. I was like, maybe we'll like.
You had to hedge. Yeah, you had to hedge your bet. Yeah.
Yeah, exactly.
All right. Does anybody else have anything they'd like to add? I think this was good. This was a good meeting of the minds. Someone's typing. Got a couple typers. Let's see. What's the Fibonacci tool? Oh, well, that is a whole big old question. So I got some videos in the YouTube videos section. If you, it's this one right here. So Fibonacci retracement, and in my YouTube video, you'll see me explain how to set it up and what values to use, and then go from there and try to practice drawing it. If you need more, I do one-on-one sessions to individually help you learn how to draw these in different scenarios and learn how to use them on a psychological basis, because in my opinion, everything follows a pattern according to human behavior, and that behavior is measurable. Bitcoin dominance chart. Yeah, let's look at it. So Bitcoin dominance is right here. And we have several things showing. Why am I not in log mode? Several things showing us that that's topped, in my opinion. This is all divergent right here. I don't know how small that might appear on your screen, but you can see that those are higher highs happening while this is lower highs happening. And we've now broken down below the 50 mark on the RSI for the first time since Bitcoin dominance's rise. And so I think this is just showing us that it's starting to break down. And I don't have any more Bitcoin, and this is one of the big reasons why. So I don't think that we're going to get above that 59.48% mark again. And I think we'll start to see this chop downward and break back down below this blue trend line. If we look at Sol dominance, it's also starting to turn bearish. Ethereum dominance is the only one that can really save us, honestly. And it's got to bounce from this 0.5 here, which it's currently still holding over and forming a nice base so far. Hopefully that moves up and we can have fun with Ethereum. You can see bullish divergence happening here as well. So you have that low, and then this is a higher low. Well, all of this is making lower lows. And if we zoom into the MACD, we have a MACD cross. So it's got a lot of work to do to get out from these depths, but it can definitely happen. The fact that this is still so bearish and still trying to make that rebound is probably the only thing that makes me think that this cycle could extend longer than I think. And it's either that or Ethereum's just not going to make it and not do what everyone thinks it might do. So those are the two scenarios that are, because this needs to take a lot of time to get out from under here. It's very not probable that this will just shoot straight up and get into bullish territory in a matter of a month. It's going to take time. It has to be a gradual move into bullish territory before people start to FOMO, and that's usually the pattern that you see. So ETH Bitcoin is also bullishly divergent. You can see that is definitely making a higher low here, while this is making a lower low. So there's still a lot of things pointing to Ethereum getting off this low and making a move. The question is how soon? Avi shared a nice rainbow chart. Yeah, I mean, according to that, we're not even close, huh? We got ways to go. I guess.
Yeah, I mean, if you look at prior cycles, like obviously we peaked out of it a few times, but I mean, I don't think the dampening should be that dramatic. I still think the double top of last cycle was kind of a weird, like external factors kind of affecting the top of the market. But
I mean, you can see the regression there though too, where it's like the very first peak is way above the red, then the second peak is not as high above the red. The third peak is right at the top of that red bar, and now we're not even making it to the orange. And so if that's the case, then we maybe only make it to the yellow zone now.
Yeah, I mean that could be true, and I think after this cycle we'll have an answer,
yeah, for sure. And as far as your commentary on the Federal Reserve, and this is just a flat out guess. I'm not basing this on anything other than how I kind of view behavior overall. But I think we won't really get the Federal Reserve token actually happening until the next cycle. And I think that'll just have to be what drives the next cycle. In this cycle, we have ETFs. It's kind of rare to have two major catalysts like ETFs and then Federal Reserve token in the same cycle. Like, I don't think it'll be used until we need another reason to get people to buy Bitcoin. Do you know what I mean? And I don't think we'll get it that soon enough for this cycle is what I think.
I mean, I think creating it is definitely going to take a long time. I don't know how long that would take, but I think announcing it and working towards it would lead to front running in the market, because then you're going to have the US as like a price agnostic bidder of Bitcoin, which is insane.
Yeah.
Right.
Absolutely.
The other thing, I dropped a tweet from someone who looked at kind of the emergence of Athena and kind of this muted price action.
Yeah, you shared that with me, that write up, and so I don't know if you want to post that, but you can.
Yeah, I posted it here in the chat, but I think that kind of, like, I still think we'll have kind of a massive move on ETH at some point, but I think it's going to have to be driven by the ETF flows, which have continued to kind of be not that great.
Yeah. Yeah, we'll need to see flows out of Bitcoin ETF and into ETH for sure.
Yeah, that'll be interesting once we see that data. But I think the big thing here is just like, at some point, there's not going to be enough supply on chain for them to hedge, because major inflows are going to basically cause a supply shock on chain.
Yeah.
So, I mean, again, it's a theoretical thing, but it's something interesting that's never existed before that could potentially happen this time. And that's what I'm interested in. I'm always trying to figure out, like, why is this time going to be different than the last time? And I think, like, you know, we had this chat around ETF approval time, I think in like June, July, and I was like, oh, this time it's different. We'll go higher. I don't know if you remember that, but
yeah, I do.
I mean, it's just kind of one of those things where it keeps it interesting. I don't know if it's right, but it kind of makes sense.
Yeah, absolutely. All right, well, we'll see how it all shakes out, and thank you all for being here. And we'll kick this year off nice and smooth and easy to begin it, and we'll see where it takes us by March, and then we'll reassess. All right, guys, thank you all so much. I appreciate your time. And it's been an hour, which is already at that mark where nobody watches the YouTube video. So make sure you hit those like buttons if you're watching this live. All right, thank you guys. Bye.